You know, the idea of building a real estate empire, it can feel totally overwhelming, right? Like some impossible dream. Well, today we're going to break that all down. We're going to show you the exact ladder investors climb, step by step, from their very first property to becoming a true force in the market.
So let's reframe this whole thing. Forget about climbing some impossible mountain. I want you to picture real estate investing as a ladder. It's that simple. Each rung is just a new level, a new strategy, and your only job is to focus on taking that next step, just one rung at a time.
Okay, but before you start climbing, you need the right gear. And in real estate, your most important tool, the one that's going to save you from countless bad deals, isn't some fancy, complicated software. Nope, it's a super simple rule of thumb. It's called the 2% rule. Think of it as your first line of defense. It's this powerful, quick filter that helps you immediately toss out all the deals that are just dead on arrival. This way, you can focus all your time and energy only on the properties that have a real shot at making you money. And look, the process could not be easier. You just take the total purchase price, figure out what 2% of that is, and then ask one simple question. Does the monthly rent meet or beat that number? If it does, great. You dig deeper. If not, you just move on. It's designed to stop you from wasting weeks analyzing a deal that was never going to work in the first place.
So let's see how this works in the real world. You see a property listed for, say, $100,000. Instantly, you know it needs to bring in at least $2,000 a month in rent to even be worth a second look. If it doesn't, next. No wasted time, no getting emotionally attached to a bad deal. All right, with our screening tool ready to go, we are officially ready to step onto the ladder. So let's start our climb at the very beginning, rung number 1, where the whole journey really kicks off. So level 1 is what we call house hacking, and this requires a huge mental shift. You have to stop seeing your home as just your biggest expense and start seeing it as your first potential asset. This strategy is pretty genius. You buy a small multifamily property, like the duplex. You live in one unit, and you have your tenants rent pay your mortgage. I mean, you're basically living for free while somebody else builds your equity.
And that leads us right into level 2, which is really just the brilliant second part of the house hack. After about a year, you move out. But, and this is key, you don't sell. Instead, you rent out the unit you were just living in. And boom, that is a pivotal moment. You have officially created your very first stream of passive income. You have an asset that is working for you 24/7. Now, level 3 is where you can seriously supercharge your income. It's the Airbnb play. And what this shows so clearly is the trade-off, right? A long-term lease, that's your steady, stable income. But in the right city, a short-term rental could literally double or even triple what you bring in each month. Sure, it's more hands-on, but that extra cash flow could be the very thing that makes a deal hit that all-important 2% rule.
Okay, you've built your foundation. You've got your first property chugging along. The next 3 levels on this ladder are all about one thing: hitting the accelerator. This is where you start to scale your portfolio and build wealth at a much, much faster pace.
Level 4 introduces you to an absolute powerhouse of a strategy called BRRRR. It stands for buy, renovate, rent, refinance, and then repeat. The cycle is incredible. You buy a property that needs some love, you force its value way up with renovations, you get a tenant in there, and then you refinance to pull all of your original cash right back out. You're left with a cash-flowing property with none of your own money in the deal, and you're ready to go do it all over again. At level 5, you graduate to the big leagues, commercial real estate. You're not renting to people anymore, you're leasing space to businesses, and often on these long-term contracts. And the secret weapon here is something called the triple net lease. This is where your tenant, not you, is responsible for paying for the big 3 expenses: property taxes, insurance, and maintenance. It's a game changer.
You know, there's a core investing principle that says go where the crowd isn't, and that's exactly what level 6 is all about. This is where you profit from, well, boring assets. Things like self-storage facilities or mobile home parks. Because they're not as glamorous as shiny skyscrapers, there's way less competition, which usually means higher profit margins and much simpler management for you. So we are now getting close to the top of the ladder. These final rungs, this is where you make the leap from being just a skilled solo investor to becoming a major force in the market itself.
At level 7, you become a real estate mogul. And the huge change here is you are no longer limited by your own money. Through a process called syndication, you can orchestrate these massive deals, like buying a giant hotel, by raising the money from other, more passive investors. You bring the deal, you bring the expertise, and they bring the cash.
Then there's level 8. At this point, you're not just buying what's already on the market. If the perfect property you're looking for doesn't exist, you just create it. You buy raw land and you develop it into whatever the market needs. This is where you can potentially 10x your investment and really build that true generational wealth.
And finally, we arrive at level 9. This is the institutional level. I'm talking about massive funds like Blackstone buying up thousands and thousands of homes at a time. At this point, investing isn't just about finding a good deal. It becomes a game of pure power and scale, all operating under the assumption that they are simply too big to fail.
Okay, we've seen the entire ladder, from bottom to top. But now, let's talk about the math that connects every single rung. The pros, they rely on just a handful of key numbers to analyze any deal, and this is their cheat sheet.
This right here is your professional cheat sheet. So we've already covered the 2% rule for that quick first look. Next up is the 50% rule. This is just a quick estimate that says, hey, assume about half your rental income is going to get eaten up by operating expenses, not counting your mortgage. And finally, the cap rate. This one tells you the property's raw earning power, as if you paid all cash for it. That makes it the perfect tool for comparing the true profitability of one property against another.
So there you have it. We've climbed the entire ladder in just a few minutes, from hacking your very first home all the way up to becoming a market institution. And all of that brings us to the single most important question of all. The path is laid out for you. The levels are crystal clear. The journey from where you are right now to where you want to be. It all starts with just one decision. Now that you know this ladder exists, you're equipped to choose your own starting point and finally begin the climb.